Stavros Tousios for M4Markets. We're going to look at gold and also euro against the pound today. When it comes to gold, we have identified this divergence last time that we talked about being a potential, having the potential to move up. We have kind of did a kind of a range over here between 1935 or so and 1970. And we have importantly re-entered this upside trend while rejected the downside shorter term trend, right? Rejected. Now this could eventually lead to a move up to around 1980 or so, okay? Because look, we do have the divergence, we do have the move to the upside. Momentum did rise at some point, and we are now above the lower values over here without having reached overbought territories. It's not a must that we do, but even if you see this without reaching oversold, then we did go to overbought. Over here, without reaching oversold, we did go to overbought. So here we did do the divergence, we have been oversold, and we're heading higher. As long as we remain above the 50, then there is potential for that to go to around 1986. That could meet resistance at the short-term downside channel, which if broken, then we might see another leg to the upside towards the 2K once again. But if we start falling again, guys, and exiting this channel again, then that would increase the chances of another leg down towards the 1900s and of course the 61.8 first, given of course that the 50% Fibonacci of that full leg to the upside around 1938 gives in. Now when it comes to euro against the pound, we had a significant development. We have broken outside over a year, 14-month upper trend line, while the upside trend line also gave us kind of a rejection in the last leg upward. And now what seems to be the case for me, is that as we fall, there is still a little bit more room to see this, to see whether this is going to provide at least some pullback. So we have rejected at that high, and what is left to be seen now is whether we can go as low as 85.40 or so, 85.60, and still be in have a divergence. Okay, if we fall straight to that level, then this divergence might fail indeed, because also this looks impulsive, and the only level to the upside that could potentially change things a little bit for the medium term will be bulls recapturing 86.50, which is the previous swing low over here. Okay, now let's look at something else as well here. If we look at this as a downside leg, the 85.30 is where the 61.8 Fibonacci expansion lies. And then below that, the 100% gets us down to 82.50, which is, of course, in the medium and longer term, a low that we saw back in March 2020. Let's not forget that this is an initial breakout, okay? And maybe we are going to see, even now, an attempt to re-enter that territory. Okay, so it would be something like this perhaps, but eventually, and if this is a 5-wave leg as I'm suspecting would be the case, we could be heading back to around 87.22, which is above the 86.50, but still that would be a correction for further moves to the downside. Let's not forget the 50 is a very important level. It's where sentiment changes, and only if things move along or beyond or below the 50% of a particular leg, let's say for example this one we just saw, then things can become more favorable to the one side or to the other.